Good morning, students. Today let's continue our discussion about money. In the last class we have discussed about modern forms of money. Which are the modern forms of money? Paper notes, coins, plastic cards and deposits with the bank. Today we shall discuss about how we use plastic cards in our daily transactions, how we transfer money through internet, that is net banking, mobile banking, POS, point of sale transactions, that is we swipe ATM cards, debit or credit card at point of sale transactions. Swipe machines are used at shops which reduce cash transactions and also reduces and controls corruption. The first form of the digital transaction is net banking, online banking or web banking. All the three names are similar. What is net banking? It is an electronic payment system that enables the customers to conduct a range of financial transactions through bank's website. It is a part of the core banking system. Using net banking, you can do a range of financial transactions, that is the financial transactions of payments or transferring amount or collecting statement, checking recent transactions, all these. So internet banking provides personal and corporate banking services of obtaining statements, bank statements, mini statements you can obtain using net banking, or checking the recent transactions, what are the debit transactions, credit transactions occurred in your account, transferring amount between accounts, transferring amount from your account to any other account, and making payments, for example electricity bill or telephone bill or any other such kind of payments, and viewing work account balance. What is the net balance in your account? What is the credit balance you have in your account? All these transactions can be done with the help of net banking or online banking. Paytm and Google Pay also examples for net banking. Through your PC or laptop with internet connection, you can do net banking transactions. Mobile banking. Through SMS or internet connection, customers can conduct banking transactions anywhere and anytime from their mobile phones. For this purpose, you have to download specific mobile app of your bank. In relation to the discussion of digital transaction or computerized system of banking, we have to see some information about demonetization. What is demonetization? It means withdrawal of a coin, note, precious metal from use as legal tender. It occurs whenever there is a change of national currency. The current form or forms of money is pulled from circulation and retired, often to be replaced with new notes or coins. If the government decides to change any currency, it can go for demonetization. For example, in India, November 2016, rupees 500 and rupees 1000 notes declared invalid, and people were asked to surrender these notes to the bank by a specific period and received new currency notes. Government issued new notes of rupees 500 and rupees 2000. You can see the image here. Queue outside a bank to exchange demonetized bank notes. Why was demonetization done in India? To eliminate fake currency and dodgy funds which have been used by terror groups to fund terrorism in India, demonetization has been occurred. Now let us discuss about the loan activities of the bank. First, let us see what is a bank. It is a financial institution that accepts deposits, and recurring accounts from the people and creates demand deposits. Lending activities can be performed either directly or indirectly through the capital markets. Here we shall discuss about the direct lending activities of the bank. In this meaning of bank, we will come to know the two main functions of the bank. One is accepting deposits and the second one is lending loans. Then we shall see what are the parties involved in this transaction, in these activities of the bank. If you see this image, there are two parties involved with the banks in the bank activities, that is depositors and borrowers. The people with excess money deposit it in the banks for safety, and in turn they earn interest on the amount deposited. At the same time, there are people who need money for various activities. They approach the banks for credit. The bank charges interest from the borrowers. Here, bank play the role of a mediator. What money is accepted by the depositor is extended as a loan to the needy people, that is borrowers. Bank gives low rate of interest to the depositors and charges a high rate of interest to the borrowers. Difference of interest from the borrowers and depositor is the bank's income. For example, suppose 3% interest paid to the depositors by the bank and 9% charged by the bank to the borrowers. The difference of interest, that is 9%, that is bank getting 9% through the extended loans, and bank is giving 3% to the depositors. So 9% minus 3%, difference 6% is a bank's income. This is income for bank because it is playing as the role of a mediator between depositors and the borrowers. Now, why people borrow loans from a bank? Even though the rate of interest is high, the borrower's rate of interest is high, but still they borrow loans from bank because of various economic activities. They don't have money to conduct their economic activities such as construction of houses, purchase of vehicle, agricultural activities, or production purpose in industries, or distribution of goods in businesses, etc. Because of all these reasons, such reasons, they need money, large amount of money, so they go for approach to bank and borrow loans. Banks keep only a small portion of their deposits as cash with themselves. For example, banks in India these days hold about 15% of their deposits as cash. This cash is kept as a provision to pay the depositors who might come to withdraw money from the bank on any particular day. Depositors have deposited their surplus money in the bank. If they need it, they will come to the bank and withdraw their amount. In that case, bank has to pay them cash. That is why bank is keeping 15% of the deposits as hard cash in the bank. What about the remaining 85% of the cash that is utilized for the purpose of lending loans to the borrowers? Now, what do you think would happen if all the depositors went to ask for their money at the same time? There will be a huge cash crisis. There is a shortage of cash to the bank. They will run out of money. Banks' cash reserve ratio will decrease. So, banks would be forced to take outstanding loans. It's not a favorable situation to the bank. With all these discussion, you are able to answer the following questions. First one, give the meaning of bank. Second, what determines the main source of income for the bank? Third one, mention any 4 forms of digital transaction. Fourth one, explain with example how people are involved with the banks. Next one, What are the two main functions of a bank? Next one, what is demonetization? Next one, what is computerization of banking system? And you are able to prepare one project, that is, prepare a collage of major areas where people use digital transactions. Thank you.